Crocoin has been on a tear over the past month, up about 42.5%, and this comes after a clean bounce off of a technical area of support that we were covering here back at about the 8-cent level. Now, there are three big reasons why I believe Crocoin has rallied so much, and in today's episode of the Everything Crypto Show, we are going to discuss why I believe this altcoin has the potential to double in the month of March and find itself back at 20 cents. Now, before we hop into the content, just a friendly reminder that I am not a financial advisor. I am simply here for your crypto news and entertainment purposes. And if you do enjoy the content, please consider hitting that sub and like button and turn that notification bell on so you can be notified when all of our latest videos go live on the channel. And with that, we are going to hop right into today's video. So if you guys watched our video on Thursday, and especially our videos, back here when we were in late January, I said that I believed Crocoin was finally forming a set of higher lows, and we were just about to break out of this set here of lower highs, as well as finding ourselves back above a key area of support at that 10-cent level. Now, this 10-cent level is really important for the price action. If we go back to 2022, which was the bear market year, we can see here that it acted as support on multiple occasions before Crocoin broke below. And if we zoom out even further, we can see that 10 cents was actually the big area of support before it went on that monster run to hit almost $1 USD. So we're going to break down three reasons in this video why I believe that Crocoin could make a very big move this month, and why it finally is breaking out of this bottom range here, this accumulation zone that it has been in since November of 2022. So the first reason I believe that Crocoin is seeing some positive price action is because of the Crocoin burns. This was introduced, I believe it was back in early 2023, and it went into effect mid last year. And we have already seen about 75 million of this altcoin burned and removed from the float completely. So basically, the way this used to work, the way that the Cronos POS chain used to work, is that you had your Crow delegated to the chain, you would stake it to a validator, and then the validator would receive the Crow rewards, and you would be given a part of this emission. Now, the way it works here is that 85% of the Crow emissions are handed out to validators and delegators, and then 15% is redirected to a community fund pool, which is sent to a Crow burn address on a periodic basis. Now, they did have two different suggestions here for kind of how they wanted to handle these burns. The first one was a threshold triggered burn. So with this model, each time the community pool's Crow balance reaches a specified amount, for example, 25 mil, a burn event will be triggered. This approach ensures that burning is responsive to the rate of token accumulation, thus directly impacting the circulating supply in a dynamic manner. And the second option was a calendar governed burn, so sticking with a time-based approach where burns occur at quarterly intervals, irrespective of how much Crow has been amassed in the community pool, which will provide a more predictable and consistent burning schedule, which may be easier for token holders and market analysts to anticipate. So we can see here that this proposal actually came out when they hit that first 50 million milestone. I believe, shortly after that is when the burn took place. And this was back in late November. The burn took place in early December. Now, fast forward here, we are in late February, and the community pool is sitting at about 25.87 million Crow, effectively meaning here that, since the proposal did go live, about 75 million Crow coin has been burned. And we can see here that at the moment, right, the first 50 million was burned. There's another 25.8 million Crow sitting in here at the moment, equivalent to just under $3 million US worth of value. So continued burns is always good for an altcoin here. The less float that there is, the less supply, the less there is to go around. And if we do see an increase in demand, then a smaller supply is definitely a very good thing for this coin. And I do think that the next two reasons we're going to talk about are going to kind of equate to more demand for this token. So the next thing I want to talk about is the buff to the staking yield that took place. This was earlier this year. And basically what we saw here on the Cronos POS chain is that the yield was dropping significantly quicker than people were used to, right? If we take a look at this chart here, you can see that the actual staking yield fell in early 2023 from about 12.5 to 14%, all the way down to about 6.5% over a 12 to 13 month period. So basically got cut in half. And the reason this happened is because we also saw the staking ratio go up a lot here on Crocoin. So at the beginning of the year, about 20% of the supply was actually being staked. And here, as we can see at the beginning of this year, this increased up to over 33% of all Cro in circulation. So how does the new mechanism actually work? So they changed 3 things with the Cronos POS chain that we need to understand to kind of understand exactly how this staking buff was actually passed and how it works. So the first one was inflation max. So this determines the highest possible annual increase in the total Cro supply, which previously was set at 2.5%, and they raised the cap here from 2.5% up to 3.7%. So effectively more Cro, more inflation on the token, which is not good for the price action. However, this was also to increase the staking yield and attract more people to lock their Cro coin up on the chain. The second one was inflation rate change. So dictating the maximum annual change in the inflation rate, then they increased that from 0.6% up to from 0.6% up to 1%. And last but not least, gold bonded. So this indicated the desired staking ratio for the Cronos POS chain, which previously sat at 30%. And the network's inflation rate adjusts in response to the target. So if the actual staking ratio is below the goal, the inflation rate will increase up to this max amount. And if the staking ratio exceeds the goal, the inflation rate will decrease. So because it passed that 30% threshold here, that actually led to a big decrease in the yield being offered. And they set that parameter up from 30% up to 60%. Now, I do think it's important to incentivize people to actually lock up their Cro on the Cronos POS chain, because when you stake your Cro on this chain, first of all, you are now getting about a 6% yield. And second of all, if you actually want to withdraw this Cro or remove it from the Cronos POS chain, you have to go through a 28-day unbonding period. Now, crypto is a very fast-moving market, okay? We can see here Crocoin was up 42% in the past month alone. And, I think the general thesis is that if people are locking up their Cro on this chain and staking it, that they're probably not here to trade it and to make, they're not here to trade it. They're here as a long-term holder looking to generate that passive income before they take profits on a longer-term basis. That's the general theory I kind of run by in terms of the Cronos POS chain, and that's why you do want to see people actually locking it up on this chain. And by locking it up, I mean, staking it and having it subject to that 28-day unbonding period. And as of right now, we have about 9.370 billion Cro staked here. So I believe that's equivalent to, 35% of all Cro in circulation. Now, the last reason I believe that Crocoin has been rallying recently, and probably the biggest one, is that they announced the launch of their Cronos hyperchain, which is set to go live in June of 2024. So what they are looking for here is three different things. So shared liquidity, yield-bearing assets, and native account abstraction. Now, if you want to learn more about all these different things, feel free to check out our video from, I believe it was last Saturday, where we kind of broke all this down in depth. But the big thing here is that effectively they are looking to create a Cronos hyperchain, a Cronos layer 2, and kind of add this to the Cronos ecosystem on top of the Cronos EVM chain as well as the Cronos POS chain. So you can see here that the Cronos ZK EVM blockchain, which, they're kind of calling the hyperchain, and I'm calling it that too because ZK EVM is a bit of a mouthful. You can see here that the Cronos hyperchain is what actually connects to Ethereum, and then the hyperbridge allows these all to connect with each other as well as other ZK Sync era chains and hyperchains, which would be the layer 3. So a lot of technical stuff, but I think the big thing to understand is what they are looking to do here. So current pain points with the blockchain industry include liquidity fragmentation. I mean, so many different chains and this does kind of cause liquidity fragmentation. People made the same argument about so many different layer 2s coming out. Now, what the Cronos hyperchain is looking to do is share this liquidity through trustless validating bridges, and the outcome will be seamless connectivity and unified liquidity. So kind of opening up the liquidity on Ethereum and other layer 2s to Cronos and vice versa. So that's a big deal in my opinion. The second one is the complexity in yield generation. So staking, liquid staking can be pretty complex and difficult for people that are kind of new to DeFi. Now, what the Cronos hyperchain is looking to do is have native yield-bearing assets. So simply by holding something like, an example of a liquid CRO, a liquid ETH, or a liquid USD on this chain, they would be rebasing tokens that automatically accrue yields without the user actually having to do anything. And the last one here is a complex UX, which I think is probably the biggest barrier to entry for, new people getting into crypto, is actually understanding how to navigate things like MetaMask and DeFi. So what they're looking to do here is have native account abstraction. So smart accounts create a butter smooth UX, basically handling, all of the transaction signing and the gas fees on the back end, and making it much simpler on the front end for people to interact with the chain. So, between the burns here, the increase in staking yield, as well as the upcoming Cronos hyperchain, these are 3 reasons why I believe Crocoin is rallying and why I believe this rally could be set to continue into the month of March. Obviously, provided that the rest of the market does remain bullish. Now, to wrap things up, I do want to take a look at the chart here. I'm going to take a look at, exactly what I'm looking at. And we did speak about that 10-cent area as a level of support at the beginning of the video. I mean, zooming out here, you can kind of see the significance of this. Let me put on a log scale so it's easier to see. You can see here, just how important that 10-cent area has been for this coin on multiple different occasions, okay? Now, we actually saw here, right? Another thing I do kind of want to point out is the importance of the bull market support band. This is a really important indicator to me, which basically shows over long periods of time if a coin is in a bullish, or if it has bullish or bearish momentum. And, this has been a pretty good indicator, pretty accurate of kind of understanding the sentiment of the market and of particular altcoins, right? So we can actually see here, going back to 2021, that Crocoin broke above the bull market support band right over here, back tested it here as a level of support at about the 15-cent range, and that is when it went on that monster run all the way up to those previous all-time highs. Now, we saw here in April, it got rejected by the bull market support band and fell all the way from 50 cents down to about 10 cents, tried to rally above it, got rejected once again, boom, fell another 50%. And even here, it did actually rally or try to rally above the bull market support band here in 2023 once, here again twice, got rejected. It was not until late 2023, until about October, that we saw a break above the bull market support band. And on a break above the bull market support band, we basically saw this thing double, right? It went from about 6 cents on that breakout up to about 12.5 cents, got above that key area of support at the 10-cent level. However, it was unable to hold it, did break down back below it, but we did see a back test here of the bull market support band on a weekly. We did break below it, but swiftly, we came back above it here in the same weekly candle to validate it as a level of support. And now we have seen continued bullish momentum for the coin back above the 10-cent area. And we've not been in this range for a very long time. So if the good news continues, if people see Crocoin kind of breaking out of an accumulation phase, that could lead to some FOMO. And we've seen the power of FOMO in all kinds of markets, right? So definitely something I am keeping my eye on here for the month of March. And on that note, let me know what you think about Crocoin in the comments down below. I hope you all enjoyed the content in today's video. I hope you are all staying happy, safe, and healthy, and I hope to catch you in the next one. Peace out for now.